whatever you wanna be. So I told myself, I'ma be a singer, I'ma play on the keys. I can do whatever I want if I just believe, yeah.
YouTube, what's the deal, man? It's your boy, Mark on the Charts, back at it again with another video. And today we will be going over the loss I took on Friday, trading NZDUSD. It was a decent trade setup, right? There were some variables that now that I look back at it, I could have definitely avoided this loss, but at the end of the day, the trade did go for a 1-to-1, right? And so, it was a good push that we got. We just didn't hit TP. And like I said, you can't control what the market does. All you can do is see your variables in the market and place the trade, right? When I say variables, I'm talking about the variables in your strategy, whatever that may be, right? If you have the variables that line up within your strategy, place the trade. Outside of that, you're not placing trades, right? It's not about winning on a trade by trade basis, right? And I said this in my last video. I could take a supply and demand trade, and then I could take a support and resistance trade, and then I could take a trade off the RSI, right? And I can hit 3 times in a row. But with that being said, I have no edge because I'm just taking any and every strategy, right? So understand, as a trader, you have to stick to one system, right? And a system that is proven to work. How do you know that a system works? How do you know that your strategy is actually profitable? Well, if you read the book Trading in the Zone or watch any of Mark Douglas's trading psychology videos, he always goes over how it takes a 20 to 25 trade sample size for you to know if a trading system works, right? Meaning, if you're not profitable over the course of 20 to 25 trades with that strategy, then that system is an unprofitable system. So you can't go off your 5 trades. You can't even go off of 10 trades, right? Because, there's times where if I have a coin, right, and I flip it, yeah, it's a 50% chance that it could land on heads or tails. Out of a 10 flip sample size, right, there's times where it can land on tails 7 times, right? But if you were to stretch that out to 25 flips or even 100 flips, then you'll start seeing the 50-50 odds play out a little bit more. And that's the same thing with your strategy, man. Tune into a strategy. One thing I would say is, if you execute a strategy flawlessly, the best thing that can happen to you is for you to lose your first 3 or 4 trades using that strategy, right? Because then you will get a paradigm shift on what it really means to be profitable. There's some of my clients that I coach, right? And I literally tell them when they're on a one-on-one call with me, I'm going to send you 10 trades over the next 8 weeks, right? And the very best scenario for us, right? The best scenario for your psychology is that we lose 3 straight trades in a row. So for example, let's say we risk $100 on this trade, right? Let's say I would have risked $100 and I sent it to one of my clients, right? And they would have lost $100 on this trade. Let's say they're risking 100, right? They lose 100. I send another trade out. They lose 100. I send another trade out and they lose 100. The best case scenario is for us to lose 3 in a row, because when we actually do catch heat, right, when we actually go on our 2 to 3 trade win streak, right, then you'll see what it really means to be profitable, because it doesn't mean winning every single trade, right? And you do get those win streaks, right? And those are almost detrimental. I remember I went on like a 7 trade win streak and I got on my high horse, right? And then I ended up coming back down because I lost a lot of money, started over leveraging, just had extra money in my account. I'm not used to going 7-0 on a 1-2, 1-3 risk and reward. And so it kind of gets in your head and you just feel like you're seeing the market and you have like a genie in the bottle. But the truth is that that's just your edge playing out, and you ran into a winning streak, just like you'll run into a losing streak, and just like you'll go 50-50 on certain weeks. But at the end of the day, it's about having the edge over the market over the course of a sample size of trades, right? So if we're risking $100 per trade trying to make 200, all we need to do is hit 4 out of 10 trades and we're profitable, right? And even more if you up the risk and reward, right? Like if you're trading a 1-3 or a 1-4, right, you have to win even less, right? Now, what I tell a lot of my clients is, first and foremost, you shoot for a 1-to-1, right? Because as a new trader, what you want to do is you want to get positive reinforcements, right? You're going to hit on a 1-to-1 a lot more than a 1-2 or a 1-3. Like if I would have placed If I would have risked 275 to make 275 on this trade, I would have made money, right? But I usually trade a 1 to 2 risk and reward, right? So I tried to make a little bit over $500, hit stop loss. It is what it is, right? But nonetheless, it was a great trading week. Still profitable on the week, made $230, right? You cannot complain about that, right? A profitable week is a profitable week in the market. The week before that, I made $1,200. You can go ahead, check that video out as well. Just go back a couple videos, you'll see that week. And this week I only placed 2 trades, right? You guys seen the trade earlier. It was the GBP CAD trade, where I made $500. And then on this trade, I ended up losing $275. So let's go over this trade. So first things first, within this trade, the first thing I seen, right, was that we were at this daily level. And this is something that I do. I like to come to the daily time frame and see where we're at in the market. This is something we call top-down analysis, right? So you'll start at the daily chart, right? You'll move your way down to the 4-hour chart. These kind of give you the overall picture of where the market wants to go, and where we're actually at, right? If you're looking at a 5-minute chart and only the 5-minute chart, you're seeing a very zoomed in microscopic perspective of what's really going on in the market. So to develop more of a bias, go up to the daily chart, the 4-hour chart, even the 1-hour chart. As you can see, we're at this daily support zone. That was my first thought when I pulled up the market. I was like, okay, we're very low. We're at a daily support. Now, if we can get some bullish market structures to the upside, I'll start looking for buys, right? So as you can see, we have bearish market structure, right? We're creating lower lows and lower highs right here, right? We hit the support. Now we're creating higher highs, right? Broke all these highs, higher lows, higher high, right? So now what we're looking for is a higher low. And at that point, now we're looking for the edge to play out, right? Liquidity, supply and demand, right? And obviously, if we're looking for a buy, we're looking for a demand zone with liquidity in front of it, right? So let's go ahead and play this out. So right here, right, we get our push. This is our demand zone, right? As you can see, we're taking off. So I draw the zone out, right? At this time, what was it? 5 a.m. in the morning, right? So I'm up and I see that we created a new high, right? So we have the higher highs. Oops. We have the higher highs and the higher lows playing out, right? So as you can see, this market structure is a lot different than this market structure. This is signaling that buyers are in the market, right? So we're looking for these buys. Now, all we need is some liquidity built up in front of the zone. So as you can see, right, we got liquidity right here. So this is the one, this is the first liquidity formed. And then this is the second area of liquidity, right? Now we're just looking for the sweep. So this is a learning lesson, right? And I want you guys to go ahead and take notes on this. So right here, you see we swept the liquidity and we got a push, right? This is, and I posted this on my story. If you don't follow me on Instagram, go ahead and do that because I post gems throughout the week. I'm posting the trades I'm in. I'm posting my wins, my losses, my withdrawals, everything, right? Being very transparent. Now, this is a learning lesson for us all. We got the liquidity sweep, but we didn't tap into the zone. And so understand, when the liquidity got swept, we already pushed and we broke these highs right here, right? So we have low, high, low, high, low, and we had a small market structure break after sweeping these highs, meaning this zone is probably weaker now because we swept the liquidity and we already got a push. Right, that's different than the trade I took earlier this week, right? If we would have just got a sweep and tapped into the zone, now not only are we sweeping the liquidity, but we're tapping in limit orders from this last push, right? And that's what gives us those moves that just truly take off, right? And if you go to my videos, you'll see a lot of the trades I get in absolutely take off because these variables are in place. Not only are we getting in at the lowest point of structure, right? If we are in a true uptrend, right, this is the lowest point of structure, this is the lowest point of structure, this low, right, didn't break this low. So this low shouldn't break this low. So that's why we're getting in right here, but we're also sweeping liquidity to give us that extra momentum to the upside, right? But the fact that we didn't tap into this zone and we got to push, understand this took away strength from the zone, right? So that was one variable where I could have, said, you know what, maybe I shouldn't take this trade. But it was Friday. I only placed one trade throughout the week, and I was like, you know what? We're super low on NZD, so when I get a tap into the zone, I still want to enter. So as you can see, we got a tap into the zone, got a bullish candlestick, entered off of the first bullish candlestick, stop loss under the low, right? And at this point, now we're just waiting. And as you can see, we hit stop loss. Now 2 learning lessons on here. Like I said already, we already swept liquidity with this candle. And so if we get a push after we swipe liquidity, right? If we get a push and we break highs over here, understand this zone is weaker now. If we would have just tapped into here while sweeping the liquidity, we probably would have went off and hit TP. Right? Or maybe not, who knows? But I do know that the zone will be stronger if you don't get that push after you sweep liquidity, right? If we sweep liquidity, tap into the zone, and then get a bullish candlestick, it's a lot more valid than if we do something like this where we sweep, come back up, and then tap the zone. Right, I hope that makes sense for you guys. Now, another thing making me a little hesitant on getting in on this trade was that this black bearish candlestick closed in our zone. Right, so in a perfect scenario, right, in a perfect world, what we want to happen, and it's crazy because we actually got our setup to play out right after this, right? I took the L and I just moved on, but we got another setup to play out. Now, this is actually what we want to happen, right? So we have a demand zone right here, right? We have liquidity. Now, understand the liquidity has to create a higher high. So, and that's for demand zones, right? For supply zones, we have to create a lower low. So if we go up here, we create a higher high, higher low, right? And then we create a low with liquidity near our zone. So what do we want to do? We want to come swipe the liquidity. We need to go lower than this wick and tap into the zone all in one move, just like we did here, right? Now, as you can see, there is no candlestick that closed in our zone, right? So this is the variables that we actually want. Here, right, we have a sweep and we didn't tap into the zone right away. Right here, we swept all in one move. You see right here, we swept, got a push, and then tapped in. So I hope this is making sense. Right here, we swept the liquidity and tapped into the zone. No candlestick closed. We got a wick off of here, right? You enter off the first bullish candlestick. Up here, we have a candlestick that closed in the zone, right? Which signifies that it's a weaker zone. If you go back to some of my videos, these trades usually just tap the zone and the valid zones just take off. Not every single time, but dude, most of the time, if you get these variables to align, right, and you get no candlesticks to close in the zone, dude, they're going for at least a 1 to 2 risk and reward. I wish I would have placed this trade, what it would have looked like, right? I would have placed it off the first bullish candlestick, right? And I would have put my, I would have probably went for like a 1 to 2 risk and reward. Let's see if it played out. Boom, right? Played out beautifully. So literally our strategy came about right after we took the loss. But understand right here, all the variables aligned. Now, to make your win rate higher, obviously, you know, you want to apply the variables that I just went over. But this trade very well could have hit and I could have been sitting here making $1,000 on the week, right? Instead, I had a loss, right? Went 1 for 1 on the week and we pulled out $230 from the market. So with all that being said, it was still a profitable week. But with every trade comes learning lessons, right? And this is just, you know, a trade that I wish I had back. You know, next time I see these variables align on a Friday, and this is where you got to be very aware of your emotions, right? I know because it was Friday, because we're at a very low zone, I kind of went against some of my own thoughts, right? I already knew that if we have a candlestick close in the zone, that it's a weaker zone, but we did get a nice little bullish candlestick push after it. And the smart thing, what would have saved me $275 on the week, was to just not take the trade, right? All my variables don't align. This isn't A plus strategy or an A plus setup. It might have been a B plus setup, right? It might have been a B setup, but it wasn't an A plus setup. And if you just take A plus setups, which takes a lot of discipline, it takes a lot of emotional control, and I'm still working my way to that point, right? We're all growing. But at the end of the day, the name of the game is profitability, right? And you can't be mad pulling profits from the market, however big, however small, right? So with that being said, guys, I hope you guys had a great week in the market. We will be back on Monday to come steal some of this bread, to come rob the market, right? Go ahead and follow me on IG at Mark_Gross, and I will catch you guys on the next video.